All right, I got Mark Matson on the show. He's an entrepreneur, author, 6 times national bestseller of the book Experiencing the American Dream. Today, guys, we're going to talk all about money. Mark, welcome to the show, brother.
Great to be with you, Joe. My
Excited,
pleasure.
man. Just, because you bring in a different perspective about money than just the average investing device. Also just talking about, I think, the mindset of money, which I find really interesting. I don't hear a lot of people talking about that. And I think your story, which I really want to get into, of how you built a business. Well, let's get into that actually right away. How
Sure.
did you go from a coal miner's grandson to building a $10 billion empire without selling your soul or selling out, so to speak?
that last part's critical,
Yeah.
the selling out part. I mean, I've been interested in money my whole life and success in general. When I was 10 years old, my dad gave me a copy of Think and Grow Rich. And he said, if you read this, you can learn about anything you want in life if it's in a book. And so I said, well, that doesn't make any sense. Number one, all I have to do is think and grow rich. And then number two is, then why doesn't everybody read the book and do it? He said, most people are lazy. Most people won't read the book. And the people that do read it, most of them won't do what it actually says to do in the book. So I started that kind of set me on a journey of understanding how money worked, how wealth worked, how the American dream worked. And every summer we'd get in the station wagon from Cincinnati and drive back to Charleston, West Virginia, where our relatives were and my grandfather. And you could see the stark difference as you went there. I mean, my dad grew up in a shack by the railroad. They only had meat one time a week. They had chicken on Sundays. They had potato and beans the rest of the time, one pair of shoes a year. They had the heat came from a fireplace literally lined with asbestos. My grandpa worked in the coal mine, and then he worked in a chemical factory for 25 years, Union Carbide. But my grandfather always had the view that money was evil, that people that had it stole it from other people, that he should have been entitled to more than he got, and that he was a victim his whole life. And my dad, on the other hand, said, look, you have this great opportunity to live the American dream in this great country. You have freedom of speech, freedom of property, freedom of religion, freedom to create what your own definition of happiness is. And if you help enough other people create wealth and prosperity for themselves, then you'll experience wealth and prosperity for yourself. And nobody owes you shit. That's the raw way that he said it. No one owes you anything. You're not entitled to anything. And you have to have hard work, inspiration, and dedication if you want to win and have your American dream for your family. So I had two different stark ways of looking at the world, and that provided an excellent background to seeing what I wanted to do and what I didn't want to do.
Yeah, it's so funny. It's like almost like I feel like I'm reading the book Think and Grow, not Think and Grow Rich, but Rich Dad Poor Dad, right? He's like, I got the rich dad and the poor dad, and now you got these two dichotomies. Like, which one you want to follow, which route you want to go down.
Yeah, that's a perfect example. And that's the other thing that my dad always told me. He said, look, there's somebody out there. He said, one of your greatest benefits that you can have in life is to be coachable, because most people aren't. And coachable means you find someone that already has the result you want, and then you either pay them money to coach you or get a relationship with them where sometimes they'll just give it to you for free. And you then do what they say and eliminate the yeah, but part of it. So many people are, yeah, but that won't work for me, or yeah, but I live in a different state, or yeah, won't. And so they have this yeah, but. So coachability means do what they say when you don't want to, do what they say when you don't understand it, and do what they say when you disagree with it. And that's why most people, I was friends with Michael Phelps, and he was talking about winning all those gold medals and more gold medals than anybody in the world. And he said he practiced 7 days a week, and he would get in yelling matches with his coach, Bob Bowman. But in the end, he would do what Bob told him to do. And that's the recipe for being coachable and achieve an achievement in life.
So on that note, did you hire a coach when you were early in this game? Did you hire?
Oh my gosh.
Yeah. By now you've probably done thousands, but back
yes.
then, in the beginning, it's like you have no money, so no one wants to invest in it because they're like, Joel, I'm broke, or Mark, I'm broke. Like I can't afford a coach. But that's when you do it, right?
Yeah. Well, it goes all the way back to high school, being coached in sports and, having great teachers that would teach you things about history or science, and then going to college and having some great teachers, not all of them. some great teachers. But I'm always looking at, the next level of business, of fitness, of relationships, and have a little bit of humility, come to those people and either pay them for their help. And I've paid for a lot of coaching and a lot of training and a lot of development over the years. And I'm still developing on a day-to-day basis now.
Yeah. Okay. It's interesting because we jumped out the gates and you already talked about Think and Grow Rich. And a lot of it is a mindset. It's an idea. It's a belief system. You've helped thousands of people rewire their money beliefs. For you, what do you think is the number one limiting belief that keeps people broke?
We call them money demons. And we have, so mindset, I think a lot of people talk about mindset. I actually talk about screens. And a screen is something that you have, a way that you look at life or you look at yourself in life, that you don't actually know that it's there. And you don't see the screen, and all you can see is what the screen allows you to see. And until you start to understand that your brain and your beliefs are mutable, changeable, and that you can have one belief and it's going to give you a certain result in life, or one screen of seeing the world. And then you can have a different screen of seeing the world. And the most powerful one in my life is, for the most of my life, I grew up as an atheist. And when I was 34 years old, I went through a divorce. And I remember during that period of time, because I had a screen called No God. And during that period, I really hit my knees and prayed with a buddy of mine. And I went in an instant from a world with no God to a world with God in it. And that changed everything: my relationships, my business, how I viewed myself as a father. So those screens can be extremely, extremely powerful. Money-wise, most people live in a world where money's hard to make, hard to invest, and hard to keep. Where money is scarce, where they mainly have a no-talk rule around money that they usually got from their family of origin. And when they do talk about money, it's often negative. And it's a lot of victimhood around money. If I only had more time, if I only had more money, poor, pitiful me, and other people have it and I don't, and I can't create it. And so you have all these money demons. In my business, I'll give you one really quick one. When I started my business, I had a money demon called employees suck. All I had was an overhead projector and a yellow pad. That was my marketing material. For those of you who don't know what a overhead projector is, Google it. And that's all I had. And I knew I needed to grow, because you can't go from 0 assets to 11 billion without growth in employees. But every time I hired an employee, they wouldn't show up, or they were sick, or they didn't have good performance, or they were entitled, whatever it was. So I, in my mind, came up with this idea, the screen, that employees suck and you're better off doing it yourself. And then I had to look at the payoff. The payoff was I got to be righteous, I got to be condescending, I got to be arrogant, I got to be a victim. But the cost was that I would never be able to grow a company. So I questioned that screen. Is it possible that there are no good employees anywhere? Well, that couldn't be the case, because there's some companies with 10,000, 20,000, 200,000 employees. So it can't be that everybody sucks. It was my job to create a culture and a business and the values and the opportunity for them that I would attract the right people. And that totally changed my screen. And since that day, I've changed many, many screens relative to business and growing wealth. But that was one of the big ones.
Yeah. So it sounds like ownership is massive. If you're going to start anywhere, to start rewiring that belief, whatever it is, whatever that demon is, it's got to start with ownership first.
Yeah. And the way that you can easily identify where it is, whatever you're complaining about in life, underneath it's a money demon. Because if you're complaining about something, you feel like you're entitled to the opposite of it. And if you think you're entitled to the opposite of it, then that makes you a victim. And when you're a victim, you're helpless. So that's how you can start to identify where those demon beliefs are.
I love that. Now, just for the tactical sense, I'm just curious, because obviously, in Think and Grow Rich, you can go, and I'm sure you talk about this in the book, but you can go and meditate and visualize and imagine. Now, how important to that is when you're talking about like even your example, right? Is it more important for folks to be doing that consistently, or is it, guys, just get into action, take one small step?
That's great. Yeah. So in the book, I talk about how to invest your energy, time, and money to create an extraordinary life. Um, the first place to start is by asking powerful questions. Most people are not curious about life. Most people just accept what they see and assume that's what it is and that their opinion is right. And I always start with trying to ask powerful questions. Then I learned that from my dad. I asked him, how did you get us out of the hills of West Virginia? And we weren't rich. We only had like maybe a 1,500 square foot house in Cincinnati. But we were out of the hills and hollers. And I said, how did you get us out? He said, well, I asked the right questions. I said, what are you talking about? It sounded like something Yoda would say, right?
Yeah.
And so I'm like, what do you mean you asked the right questions? He said, well, if I asked like your grandpa, why am I doomed to live in this house stuck in West Virginia for the rest of my life? My life would have turned out one way. I asked a different question. How could I create wealth and prosperity for me and my family? And how could I escape West Virginia? So those are two different sets of questions. The questions will inform where you're looking. Where you are looking will inform what's possible for you or what your next set of actions should be. So it starts with asking the right questions and realizing where you're asking a question that basically just nails one of your feet to the floor and you're just going around in circles. And then you have to have a purpose. You have to have a purpose in life before you start visualization, which I'm a big fan of that. That's one of the strategies, having a powerful future view. But before you do that, you have to have a purpose for your money and your life, which is greater than money itself. And until you have that purpose, you'll just keep falling for the next, money. First of all, money can't make you happy. No matter how much money, I've seen people with 50 million, 100 million, it cannot make you happy. So where do you get happiness in life? You get happiness in life from having a purpose that you're committed to, that's fulfilling, that creates powerful relationships with other people. And then you can start thinking about the strategies and, how you're going to build your business or your value for other people. But you have to have purpose first.
Love that. Love that, brother. I wanted to ask you, I thought it was so interesting, your story that you built this $10 billion business, right? But you did it in a unorthodox way, in the sense that you rejected your employees from making commissions. And now I don't know all there is to know about it, but I do know from listening to Tony Robbins, kind of learning more about fiduciaries, and then also having, I get hit up by all the insurance guys and out there, the whole life insurance guys and stuff. And it's great. I think there's probably benefits to it all, but at the end of the day, those guys make commissions, and that's why they want to sell you a whole life insurance policy or whatever, right? And again, I'm sure there's some benefits too, but I'm curious for you, man. That had to take some balls. That had to take you're doing something completely different than anybody else was doing.
Well, there was two things to that. One was the commissions themselves. From a very young age, I wanted to be a true entrepreneur, and a true entrepreneur is someone who creates a business that lives and grows even in their absence. Whether that's forced, whether you die, somebody like Disney, created a business that lived on, or whether you take a nice sabbatical for 3 months in Europe, but it continues to grow and it has value. And I realized, because I was in the commission business as a financial planner / stockbroker with the broker deal and an insurance company at the ripe old age of 25, that if I did this experiment called commission-based financial planning for the next 30 years, I would have none of those things. I would have no freedom. I would have no value to my business. I would have nothing that would grow in perpetuity, because it was all me hustling to try to sell people stuff. And I was like being on a hamster on a wheel. There's a lot of jobs like that, by the way, where you don't really create any value. You have a high-paying job you can't escape. And I have great empathy for those people, because I was one of them. The other thing is, it's not good for clients, because it sets up a conflict of interest, because broker dealers follow a suitability standard, which means if you're suitable to lose your money, you can invest in it. That's basically what a suitability standard is.
We have boiler room, right?
Right. Boiler room. Right.
Yeah.
And So that, and then, there are, AKA Boiler Room and others, there are write out Ponzi schemes,
Yep.
Madoff and others in more modern Sam Bankman-Fried and the Bitcoin scandal and fraud. So there's a lot of ways to lose your money out there, way more ways to lose it than make it. And then the other thing that I discovered was, so the commissions didn't work for the advisor, didn't work for the client. Now, some advisors will tell you, well, I can disassociate myself with, and to that I say, that's BS. You're a human being. You got a mortgage payment, and you got a choice between a commission product that pays you 10%, like an annuity, and then you got it over here managing people's money for a small amount, maybe 1% or less. A lot of guys are going to go for that 10%, and that's going to skew their recommendations. Nobody's immune from that. So I recognize, hey, I got to get out of this commission business. That's number one. And then number two, which was even bigger, everyone thinks of investing as stock picking, market timing, and track record investing. And all of the academic and scientific research, and this was early on, this was circa 1990, 1991, the research that was done at the University of Chicago and other places said that all the knowable information is already in the price. So it's random and unpredictable. And those people trying to beat the market end up losing by about 3 to 5% per year. And that was a blow because all of my clients were in active mutual funds trying to beat the market. And that was like getting gut punched when I heard that first debate between Rex Sinkfield and Donald Yachman. And it became extremely clear, Joel, 95% of the active managers over a 15-year period fail to deliver even a market rate return.
Wow.
And 15% beat it. But if the mutual fund companies knew who the best managers were in advance, then they'd only have that 15%. Then 100% would beat the market. So it was a big scam. And so I couldn't do commissions, and I had no business model at the time to do academic investing models with people. So I had to invent both of those things in 1991.
Yeah, because it's all random, right? I remember I read a book a long time ago called The Random Walk Down Wall Street. And I was like, this is fascinating.
Burton Malkiel, yeah, he was one of the first. It was a great book, seminal work, that all the knowable and predictable information is in the market already. Therefore, only random and unpredictable information moves prices going forward, which leaves investors in a lurch. Then where do the returns come from? Well, they don't come from brilliant managers. They come from the market, because if you look at different dimensions of the market based on their risk characteristics, they have different expected returns over long periods of time. And then you have to know how to build them into a portfolio to get the highest expected return with the lowest amount of volatility. And that's a critically hard task to do. And then you have to remain disciplined for 30 years. And that's even harder to do. And at 27 years old, I started this company. And I went and got a lot of mentors and to help me do it. Eugene Fama, Nobel Prize winner, David Booth, Rex Sinkfield. These are academic guys from the University of Chicago. Because, what does some 27-year-old kid know, right?
Yeah. Okay, so if traditional advice then in the industry is dead or broken, what are you guys doing differently at Matson Money? I'm just kind of curious. How do you kind of support the clients in a different way than what we're traditionally sold or used to hearing, right?
Yeah. Well, first of all, you have to eliminate the gambling. We have a 2-day workshop called the American Dream Experience. I taught one last week. And we actually educate and train investors, since coaching and training so built into my DNA. So unlike some advisor where you just go in and they say, buy this, buy that, sell this, we actually train and develop people to understand the science and the academics. Now, they might only stand 2% of it, because there's 80 years of research, right? And it's very complicated. But if I can get them understanding just enough that they know that stock picking, market timing, and track record investing are destructive, then we can start looking at how would you build a portfolio to fulfill in your life's dreams, given that you have a purpose for your life and it's not gambling with your money. So how would you use science to actually build a portfolio? And then we have a whole section on the science of portfolio. And there's two critical pieces to it, Joel. There's how to use the science to build the portfolio. That's critical. And that could be, 30 years of class. And then there's how do you then prepare yourself mentally to actually stay disciplined, because the human brain is not engineered for long-term scientific investing, because you have instincts, which are always going to make you want to try to buy the thing that's high, sell the thing that's hurting you, that's low. You have emotions, fear, greed, sadness, guilt, anger, all those emotions that are totally in there all the time. And then you have biases, which are mental mistakes that people make that are in the DNA. For example, one of the biases, there are 180, one of them's hurting bias. We as human beings feel more comfortable if other people are emulating the same investing things that we're talking about, like the Mag 7 or the S&P 500 or tech stocks. If the Bitcoin, gold, commodities, if everybody's talking about it, we figure that it's safe. And then it's, hurting's great for zebra, terrible for investors. That's how bubbles happen. So they end up chasing market return. Familiarity bias. We usually buy stocks that we're familiar with. We know that are big names. Hindsight bias. We figure that, in hindsight, those are the best 10 stocks. So we think they're the best 10 stocks going forward. False patterning. We see something data, and then we have false patterning. We think that's going to continue in the future. So these are all the things. And then to make matters worse, Joel, you have all these brokers that are trained how to take advantage of your brain and how it works. Not to train you and educate you and have new screens, but to take the ones you have and manipulate and control you to being their clients and being their customers and believing their lies about how they manage money. And it's a big job to train and educate people and then to coach them. That's the other thing that we do that most advisors don't. We actually coach our clients how to stay disciplined and train them how to pick the best portfolios for themselves.
Love that. Dude, I love that. And I love that you tie in the brain and the neuroscience behind it, because there's so much. At the end of the day, we're emotional creatures. We buy on emotion and then justify it right with logic later. So
no matter how I tell people, no matter how big your IQ is, the cheesecake still looks good. And everybody knows the rules of losing weight. You eat less and move more. And yet so many people fail to be able to apply it. It's one thing to know the rules, but to apply the rules, that's a whole nother deal.
Yeah. Which is so critical, actually, I think, to have a coach, to have someone in your corner, like kind of reminding you about why you're doing this, because you got to have someone to kind of reorient, I think, all the time, because it's so easy emotionally to crap out or go, I got to sell or I got to do this, right? So it's critical what you're doing.
Well, like in 1991, I thought, look, this information is so compelling. The science is so strong that surely maybe my business model will have 5 or 10 years. And then everyone will have caught on, and that's all right. I'll help spread the message. I was 27, but I'll have to, have a different business model after everybody figures this out and does it. Well, it never happened. It got worse because I couldn't foresee 24/7 news cycle. There was no cable TV. There was no cable news trying to get people to predict the future about what they're going to do with their portfolios. We didn't have cell phones. Smartphones. We didn't have Robinhood in your pocket right next to DraftKings. We didn't have these big Schwabs and these big Vanguard robo advisors, ripping people, getting them to buy and sell and trade. We didn't have exotic, bizarre things like Bitcoin, gold ETFs. There's over 1,500 various ETFs. 99.9% of them are absolute garbage. Nobody should own. But they do, and they're speculating and gambling with them. The world actually got more difficult to navigate for a long-term, prudent investor. And I don't ever expect it. People say, well, when's it ever going to stop? No, it's never going to stop. When's Vegas going to disappear? Because people figure out, sin isn't great for you. Pick your sin right there. So it's never going to end. It's never going to stop. But it's like someone who wants to lose weight or someone who wants to stop drinking or someone who wants to prudently invest and stop gambling. You need a reinforcement coaching system and mechanism that actually coaches you to help you stay on track. Without it, it's going to be devastation.
Yeah, huge. You mentioned some things that I want to actually dive into, current things. Bitcoin. What are your thoughts? Just overall?
Well, I have a chapter in the book called Toxic Investments. And, it's being generous to call them an investment, actually. Bitcoin is nothing but a con.
Wow.
And here's how it works. If you buy a stock, you own part of the company. You actually own something. The assets, the intellectual property, the factories, any of the things that intellectual property, royalties. I mean, you own the company. You own a piece. If you buy a bond, you own a promise from a company to pay you an income stream and then pay your money back. So there's something behind it. That's not how Bitcoin works. There is no there. There's no company. There's no bond. There's no assets. You are 100% dependent on your value of your Bitcoin or your crypto. You're 100% dependent on what P.T. Barnum said, there's a sucker born every second. You're 100% dependent on somebody being a bigger fool, willing to pay a lot of money for something that doesn't even exist. And it's so destructive. And the way it's being marketed is so destructive. It's being marketed as a currency. Well, it's not a currency because currencies have to have very low volatility. Otherwise, the system's going to implode. They can't go up 50% in a month. They can't crash 50% in a month. If you do that, you've destroyed your currency in your country. So it's not a currency. It's not regulated, and that's how people are being defrauded. And it's great for scammers, and it's great for ransomware, but it's terrible for real investors. And so I tell investors, look, you have to do the best you can to stay away from this garbage. I know Trump likes it, and I'm a Trump fan. I like Trump. I like a lot of things he's doing, but I call him as I see him. This is not good for investors. They should stay away.
Wow. Yeah. It's like you're saying, at the end of the day, you could do it, but it's a gamble. What you were talking about at the beginning, you're gambling most of the time with your money, and Bitcoin would just be another asset that would
It's a pure speculation. If you got 50,000 you want to throw away and you want to gamble with, it's probably more fun in Vegas than it is to watch that app that you downloaded and that you're trading your Bitcoin on. Look, addiction is a major part of investing. Our cell phones are addictive enough, right? With Instagram and text messages and so forth. But when you put a trading app on your phone, now it's addiction. It's investing on crack. I mean, it's buzzing you, and you're late at night, and you just become hooked to your phone as an appendage of your body, and it's very dangerous. And it steals your peace of mind.
Yeah.
You could be actually having a great life. Instead, you're focused on that thing.
Mm-hmm. Yep. You mentioned Trump, who I also love, but right now we're talking about tariffs, and that people are losing their minds. Mark, what do you think about that? What's your take on tariffs? Is the world, is it coming to an end now with this? What's going on?
Well, it's not coming to an end. The world has been through much worse than tariffs. Believe me this. Look, if you do a little history, I mean, it doesn't take much, just a little understanding of history, which I know we don't teach in school today. But if you actually look at history, take World War II, okay? So you had from the day the United States entered World War II with Pearl Harbor to the end when Japan surrendered. You had 100 million people perish from the planet. 100 million. You had the complete destruction of Germany. You had the complete destruction of Europe. You had shortly after that, the Great Depression, or excuse me, before that was the Great Depression in the United States. And during this period of time, of the worst horrific period you can imagine, that 5-year period, the S&P made over 12% per year during this terrible carnage. So, look, if you're an investor, from an investor's perspective, what's some tariffs going to mean? Well, what it means is he's a really good negotiator. And this is one of my downfalls. I am not a great negotiator. If I go into a car lot, I'm buying a car, and that's it. Probably way more than I should be paying. I'm just not good at negotiating. I hate it. but he's great at it.
Yeah.
And you negotiate from a position of strength. You don't negotiate from a position of weakness, like Obama, going to Iran and giving them billions of dollars and giving them everything they want, and then bending a knee and then saying, will you please take down your nuclear program? That's not how negotiation works. You always negotiate from strength. And Trump understands there are evil people in the world. I know it's not politically correct, guys, but there are evil people. There are people that want to destroy America. I'm talking about the American dream. They don't want you to have freedom of speech. They don't want you to have freedom of religion. Iran doesn't want you to have freedom of religion. They view us as the great Satan. They want to kill us. I don't know if Russia wants to kill us or China, but they're sure not our friend, and they're communist countries. So, I think it's rather naive of people to think that we're just going to, let's just have a conversation and see if you can make more favorable trade. And that's not the way it works. And he understands that. And he's already got a lot of people coming back and saying, okay, great. We're going to negotiate with you in good faith, and we're going to have favorable trade provisions. So I think that part's great. He's done a lot of things he said he was going to do. He stopped the inflow of people coming in. Inflation now is back down under control. He's opening up markets. There's jobs coming back to the United States. We got to get this tax thing through, though. It would be a debacle. It would be a tragedy if taxes went back up on people right now. But no, I think people need to take, when it comes to investing, the other thing people need to do is that they need to diversify globally, and they fail to do that because they're too myopically focused just on the U.S. International large value stocks this year, the S&P is only up 1%. International large value stocks are up 17%, and most people don't own them. They're highly focused on U.S. large companies and usually tech companies. So they're not using global international diversification, and they'd be much more safe, and they would have to worry about the U.S. a little less if they built better portfolios.
Yeah. You mentioned also bubbles earlier on. What's the next big bubble that you see coming? Obviously, can't predict anything. It's all random, but we look. But at the same time, right? I think if you look at like the mortgage chart or just the not the mortgage, but homes and the bubble, it's like every 16 years. It's like happens like clockwork, right? Same thing with the stock market, right? When they talk about like recessions, it's all clockwork. So what do you see, forthcoming?
Yeah. Well, that's a great question. That's way above my pay grade. If I knew when and which sector was going to be the next Great Depression or recession, then you would just sell short the companies that were in that sector, and you'd be a billionaire. The reality is that we don't get to know in advance when the bubble comes and busts. We don't get to know in advance where it is, in what sectors, or in what part of the world, or in what individual companies. Several years back, Signature Bank went under. A little bit more historically, companies you thought would never go under, like Kodak, companies like Blockbuster. I mean, Netflix wanted Blockbuster to buy them for $50 million. And the CEO of Blockbuster said, no, we got all this brick and mortar. We don't need you. So Kodak invented the digital camera, and they sold it for $1 million to another company. You just don't get to know where the bubbles are. What you have to do, though, is you have to assume that there will be bubbles, and you have to build your portfolio so you can take that risk. So equity bubbles, and the other thing about bubbles is that if it's a bad enough bubble like 2008, 2009, the S&P went down 50%, but equities are all positively correlated. The S&P went down 50. The global markets went down because they're correlated. And the only way you protected yourself was high quality fixed income. So when that does happen, when you in 2008, beginning in 9, you lost 50% of all your money in the S&P, you have to rebalance and sell that portion of your fixed income, buy the sector that had the massive crash, and rebalance it back to its rightful percentages. And that is a skill that's almost impossible for investors to follow. 2020 was a very similar experience. Bam, COVID hits. You have death clocks on TV. the market loses 30 to 45%. All the talking heads are saying, get out. It's going to be much worse. It's going to drop. You're going to lose another 50%. But we were rebalancing the first quarter. So if I had a client that had 50% equities, 50% fixed income, and now their portfolio is way under, we're selling the fixed income, buying the equities, putting it back to its target. By the end of the year, there was one quarter alone that small value stocks was up 50% in 3 months. But most people missed it because they panicked and they were out of the market. So the way to handle the uncertainty of bubbles is to create a portfolio such that you can take the volatility and that you can stay disciplined no matter what happens. Because if your portfolio is if you require a prediction about the future for your portfolio to be successful, your portfolio is already broken.
Yeah.
But however, I will say, given that from 1995 to 2000, the S&P made 22% per year on average, 5 years in a row. Tech stocks made 45% per year, 5 years in a row. Everybody wanted tech stocks. Everybody wanted the S&P. And then you had one of the worst crashes in history. The S&P lost 50%. Tech stocks lost 75%. And while history may not repeat itself exactly, it sure seems to rhyme. And if I looked at any mistake most investors are making today, it's way too much S&P, way too much U.S. large, way too much tech stocks. And investors are making the same types of errors, unforced errors they made back in 1995 to 2000.
Okay. Yeah. Amazing. That and listening to Jim Cramer, right? That's probably also just stay away from that, right?
I have a little. Yeah. Jim Cramer says diversification is 5 to 10 stocks. We say 27,000 unique holdings in 78 different countries.
Wow.
Yeah.
Yeah. That's a big difference. Well, and if you got that much diversity and balance, you're not going to get crushed in any market because you're so well diversified, right?
Well, yeah. I was set. Yeah. You got 27,000 unique holdings in 78 different countries. And people say, well, what happened? If it's some terrible, well, how could I lose all my money? I can only think of if 27,000 companies and bonds go bankrupt instantaneously, that's a extinction level event. That's a asteroid, or that's aliens coming down, or that's, Walking Dead 3. That's just something unfathomable. And if that happens, you're not going to be worried about your portfolio. You're going to be looking for ammo and, and automatic
my buddy
ARs.
says the same thing. He's like, Joel, never panic. He's like, if that happens, you need a gun. You don't need a stock. That's not your problem.
That's right.
Yeah. I wanted to go back a little bit just in terms of habits and, back to that kind of like human bias. I was curious, but maybe you already answered it when you talked about just addiction and just that, we as just the normal human just by emotion, right? But I was going to ask you if there was a money habit that you saw that feels smart, but is actually killing people's long-term wealth.
Yeah, I do. That's a good question. First of all, the reason money is so hard for most people is money's relative in the history of humanity. Money is a really recent phenomenon. There are no cave paintings 20,000 years ago in France of, Cro-Magnon man, trading currencies or stocks. So this is a recent phenomenon. This whole idea of money in general is relatively new within, last, probably 4,000 or 5,000 years. So it's new phenomena. The brain has to adapt to it. As far as mistakes that people make, I think that Dave Ramsey does so much damage to people. Now, look, I get it. You don't want to crank up your credit cards. You don't want to, buy stuff you can't afford. That's just common sense. I don't think you need to turn into a radio show to hear that. But he also says, never borrow money. Never. Because the borrower is a slave to the lender. Now, and then he uses the Bible to justify that. So I think that's terrible advice. There is a time to borrow, and there is a time where it puts you in a better position. When I started this company, I had 3 credit cards. and I put $30,000 of debt on those 3 credit cards. Today, we have over $11 billion of assets under management, and the company was last valued for $250 million. So what? I should what? Work at a 9-to-5 job instead of being an entrepreneur? A lot of entrepreneurs borrow money. Steve Jobs and Mark Zuckerberg and Jeff Bezos. And I mean, a lot of people borrow money, and a lot of people give away part of their company through issuing stock, which isn't a loan, but it's giving away your value in your company to somebody else. So I think this is a really backward, destructive thing to tell people. Yes, you don't want to do it imprudently, and yes, you don't want to buy things you can't afford. But if you want to be a slave and loan somebody $1 million and with the outcome that you may not get it back, the lender isn't exactly in an easy position either. So I think, and then of course the investment advice is terrible. He says buy 4 mutual funds, and they're all active funds. So I think that's also equally disaster. Peter Schiff would tell people go out and just buy gold and put all your money in gold. I think that's disastrous. Tony just wrote a book. Basically, the book, it's about the chalice, the holy grail of investing. And I think that kind of language is destructive in nature. There is no holy grail because there is no magical thing that's holy that will deliver you from bad investing experiences. It's a lot of hard work and discipline. Secondly, basically, he summarizes in the book, if you want to be a billionaire, invest like a billionaire. Buy hedge funds and buy massive real estate and buy ownership in Major League Baseball teams and leverage and use massive leverage. And of course, then he refers people to invest with his buddy, who he gets a percentage from in the book. So it's basically a large marketing brochure.
We're talking about Tony Robbins.
Yeah.
Yeah. Okay. Yeah. Cool. I didn't know that.
Yeah. So, yes, you look out there and you see a Mark Cuban or whatever, and you say, oh, I want to be a billionaire too. But for every Mark Cuban there is out there, there are millions of people that went bankrupt trying to invest like a millionaire, making rabbit ears here. So I think it's terrible advice for the average person and extremely dangerous. I wouldn't do it.
Yeah. How do wealthy people then think about money differently than you think anyone else? And can it be learned?
I definitely think it can be learned.
With a lot of book, right?
Yeah, well, they could, definitely get the book. There's 2 things. How do I create it? And I try to separate these things. How do I create it? And then how do I invest it? And building a massively successful company is a little bit different than building a massively successful portfolio. It requires a different skill set. Or whether you're a doctor or an engineer or something where you've made something amazing and you've earned a lot of income over the years, and then you've wisely invested it. But I think a lot of people today are too focused on the quick it's much easier to get rich slowly over time than it is to get rich overnight. And having, started relatively from nothing and created what we've created today, I can look back at some of those times when I had relatively nothing, those hard fights that we had to fight to get where we are today. And I look back, at those war stories with nostalgia and a feeling of accomplishment, having gone from nothing to where we are today. But I think a lot today, people want to start off at the top. I want that instant podcast. I want that instant following. I want to be that YouTube channel that's, making me $10 million a year by jumping on trampolines and jumping off of bridges into, rivers and all the stuff and they're kind of been taught that because they're in this culture of watching their cell phone and thinking they can be influencers. I think it's far easier to say, how can I create wealth by creating something of value other than just YouTube? Because it's a crowded space now.
Mm-hmm. I love that. Create value. I heard somebody say the other day, be uncomfortably generous. And I love that. And it ties in exactly with what you're talking about.
I think people, if I look at it and say, okay, I want $1 million a year in income, or I want to build a business that's worth $30 million. The next question I have to think about is, okay, if I want to do that, what can I deliver to the world that is worth $30 million? So I'm not going to magically get it unless I create something of value. So what can I create of value that doesn't exist in the world? And it's going to get harder for people because you have AI and you have quantum computing and you have, hooked up maybe with robotics. We have these cars in Scottsdale, Joel. They drive themselves. They literally, they're called Waymo. And I've ridden in one with my family, and it is creepy. It is so weird. It drives up to you. It opens the door. You click your app and say, okay, yes, it's us. You get in the car and bam, it drives you 30 miles away. And it is bizarre. But crazy stuff is coming. So you have to ask yourself, if you want to create wealth for yourself and your family, what can I create that can't be created by artificial intelligence, robotics, quantum computing, because that's where the game's going to be played in the future. And that's a human endeavor.
Yeah, huge. I was going to ask you too, if you lost it all today, what's the first thing you do? And is that what you would do, is look for where I can create value and then make that happen? If you had to rebuild all your wealth, assuming.
I think there's another thing there that goes with that, which is you do what you love. I love coaching and I love training. I'm not exactly sure what it would be, but it would definitely be coaching and training people, helping people develop, doing workshops and classes for people. My dad always said, do what you love and the money will come. And work hard. I mean, I think work ethic needs more emphasis. It would snow in Cincinnati, and if school was closed, the other kids would go to the garage, get their sleds, go to the golf course that had hills on it, and my dad would say, "Here, I have my sled in my hands," and he'd say, here's your shovel." I said, "What's this for?" He said, "Because you're going to shovel our walk and our driveway. Then you're going to go to the neighbors. You're going to ask them if they want their, shovel. And sometimes they'd give me a couple bucks. Sometimes they wouldn't give me anything, just hot chocolate and cookies. But then I look at the work. He said, work is its own value, hard work and determination, and that sense of fulfillment when you've created something. That's the best thing I love about being an entrepreneur. I love creating and innovating things that never existed before. That is such a high for me. It is just so fulfilling to create something that no one ever imagined. So that's I do something in that area. Don't know exactly what. And it probably would have to do with money too.
Yeah. Awesome. I know we're going to wrap things up in a little bit. I wanted to ask you what, any exciting projects or anything that down the pipeline that you can kind of tell us about that you're up to?
Yeah, my first project was create an award-winning class. We created the American Dream Experience, which is a 2-day workshop. Then I did a.
Now, Mark, is that just for investors, like already seasoned investors? But what about like a lay person like me who just wants to be financially savvy?
Yeah, anybody can come. We do them live here in Scottsdale, and we also do them virtual a couple times a year. So anybody can attend those. It's on our website if anybody wants to attend. You'll also get some one-on-one coaching from one of my advisors to help take you through the process. So we created that. I put $10 million into creating it. We've had over almost 6,000 families now take the class. It's been extremely rewarding. The next piece of it is to create, and I created a summit to visualize the future of how to make, and then the book, which now is a bestseller. And then I put together a symposium, and I had my buddy Rob Lowe in it. I had Brandon Tatum, who is a really cool influencer, does a lot of political commentary.
Brandon's out there in Arizona, I believe, right?
Oh, yeah, he is. We lift weights together. That's how I met him.
That's great.
At the gym.
Yeah.
Yeah, he's a good dude. And then I had Arnold Schwarzenegger, who then also made a comment for the book. I had several Nobel Prize winners that were part of the summit. And so the book was the next piece of it. Then the next after that, and I'm going to start, my goal is to start next year, is to do a documentary on money, because so few of those exist. And probably the working title is, Your Brain on Money. And so it'll deal with the psychological issues of the brain and the mind. And then the last piece of it is to build something I call the Dream Center, which is an experiential thing for investors to be able to go through. Think of it kind of like Disney, but relevant to capitalism and free markets and creating wealth for your family and your dreams and investing and helping teach your children about money. I tell people the American dream is only one generation from dying because it's not something you're born with, it's something that has to be taught. And I've made it part of my mission with the book and our training and education to make it my mission to teach and educate and help preserve and grow and defend the American dream. And I also say that the American dream is for everybody. It's not your politics. It's not your race. It's not your gender. It's not what country you come from. We really believe that the American dream should exist for everyone. And we believe that the American dream should be a global phenomenon, that it shouldn't be just in America. And the more free the rest of the world becomes, the more prosperous and the higher the quality of life becomes for everybody on the planet.
Dude, I love that. And I love it because you know what you're talking about too is, and you've been breadcrumbing this along the entire podcast, but it's that money is a skill. And it's not an accident that Mark Matson does really well and is really wealthy. It's not an accident. Like there's actually a blueprint. If you got to do the work and you got to follow it, you got to stay consistent. And I think and what you're talking about is, that American dream it's there for everybody. But if you don't know how the skills and how to find it, how to get to it, you're gonna miss out.
I was lucky, because I had my dad that built in that screen, from when I was young. But if you didn't have that, then you want to start reading and studying and finding other people that have that as a screen. You're absolutely right, Joel. There's no way I would write a book. There's no way I would have wrote this book. There's no way I would have started a company that has 11 billion under management. There's no way I'd have 500 advisors that I work with and, over 70,000 investor accounts. There's no way any of this would have happened with the screen that my grandpa had, which was victimhood, entitlement, blame, and this fatalism that he was born to just live and die, and he died at a very young age from the chemicals that he breathed literally in the coal mine and in the chemical plant, and it was really sad. It was really sad to watch him go. I try not to be too critical because if he hadn't spent those years in the coal mine and those years at the chemical plant, he did provide for my dad, and he gave my dad an ability to see further. And because of the hard work that he did and his ancestors before him, it made all this possible.
Yeah. So cool. You know what? Sorry. Can I ask one last selfish question?
Sure.
I have kids and you have kids. What are you teaching your kids? I'm curious, like, what are you doing? Cause it's interesting what you're talking about the whole screen and the money in the screen. And my kids are 11 and 7 and they'll come home from school and they'll make all these not excuses, but Johnny did this and that. And I'm like, I don't want to hear it. And I'm like, you can be whatever you want. And funny enough, I printed out I took Napoleon Hill's book, I threw it into AI and I had it made a kid's version. I started reading.
Oh, that's cool.
Yeah, man.
How cool is that?
Yeah. And I just wanted to I was like, how can we make this like fun, but entertaining and that they can understand some of these concepts? Cause I wanted to really show them that it's a choice. Right. But I was just curious, like, what do you try to instill in with kids and what's like the biggest lesson that you
well whatever I do, it's with trying to teach my kids anything is often with great difficulty. I have I have 8 kids. Melissa and I have 8 kids, and we're not even Catholic. She had 3 when I met her. I had 3. We decided when we got married that was it. We didn't need more kids. 2 years after that, she came to me and said, I love you so much. I can't imagine living life without having kids with you. And I said, well, I can. And then she won me over. And so we had 2 more, Gage and Liam, and Gage is 12 and Liam just turned 10. And they're also different, Joel. They're just also out of the 8, they're also different. Some of them needed almost no prompting at all, just very aggressive, very, open, very open to learning. And I've got one son that, man, he just doesn't want to learn anything and is, just getting ready to turn 30. And I think he's just happy staying at his grandma's and playing, video games in the basement. I mean, I wish I had a magic formula. I try to teach him what my dad taught me. which is the value of hard work, and that you need to think about other people first, and that you and gratitude for living in the greatest country that's ever existed at the greatest time ever to be alive. Just a few short thousand years ago, you didn't have running water. Even 200 years ago, you didn't have anesthesia for surgery. No one knew what germs were until 100 years ago. You didn't have antibiotics. You didn't have air conditioning. You didn't have heating. You didn't have modern medicine. You didn't have the quality of food. I mean, we do this in Scottsdale. Sometimes people come from New York to take the class. 100 years ago, 200 years ago, you got to get on a wagon train. That's going to take you a year to get to Scottsdale, and half of the people are going to die on the way over. I mean, we're in an airplane at 35,000 feet, bitching and moaning because our Wi-Fi doesn't work. So I think sometimes we're a little entitled as a culture, and we don't always see the miracles that are in front of us. And even if you only make $50,000 to $100,000 a year, you have a better quality of life than the King of England did 500 years ago. I mean, it's just it's a miracle to be alive. We ought to wake up every morning going, "Oh my gosh, I can't believe I'm alive! This is incredible! Look at this, all these miracles that I have all around me." So I try to stay conscious of that, even including we play a little game at the dinner table. It's called "Who'd Be Dead," and almost everybody in our family, would have died without modern medicine already. So it really is a miracle, the quality of life that we have. I always tell people, if you can't be happy now in this country with this quality of life, then you're never going to be happy.
Wow. Yeah.
Because it's the best. I know there are tragedies and there are problems, but we can face them with optimism and determination and grit. But the complaining and the moaning and the whining and the victimization, that never fixes anything. It never helps anything.
Yeah, so true. Love that, brother. Thanks for that advice. That's such good stuff. And you're right. Kids are so different. I have one kid that's just fly by the seat of his pants, and the other one's like me, very serious and goal oriented. So all I do is I just try to give them the screen, like you said. I just try to show them the screen, and that's it. And then how they project it, that's on them, but I do my best to try to give them the screen. Hopefully, that's all I'm trying to set. Man, last but not least, where can people find you in terms of like social media? Are you active more on Instagram or anything like that? Or
I am active on Instagram. You can find Mark Matson on Instagram, also Facebook. You can get the book "Experiencing the American Dream." It's on Amazon and a lot of other online stores too. Also, Barnes and Noble. You can order it from there. But it's a national bestseller. You can get it there. You can sign up for our class for anybody that wants to sign up for the class, the workshop, the 2-day workshop. You can go to our website and drop us a comment, and we can help you sign up for that. And then, of course, TikTok and that kind of stuff.
Yeah, you're everywhere, basically. Yeah. You're ubiquitous. Love it. Mark Matson, thanks for being on the show, brother. Appreciate you.
Thanks, Joe. I really appreciate it, buddy. It was nice spending time with you.
Yeah.